Welcome to Echo Trade, where we talk to professional portfolio managers, hear their insights on the market to help you navigate your own portfolio. And if you want to just copy their strategies, you can do so at echotrading.com. Today, we have Daniel Wu from Pair Lending, and he's going to give us an update on his growth at market pivot points portfolio, which has been outperforming the market for quite some time and has been the number one portfolio on Echo Trade for this year. So excited to hear what he has to say. He's also going to give us his thoughts on the recent Fed meeting and the 50-point drop and what that means for the broader market moving forward. And then he's going to cap it off with a pick'em for his pick for his favorite stock for right now, as well as a hedge against the broader market. So let's jump in with Daniel. Hey, Daniel, good to have you here. Appreciate you being here. I'm going to dive right in. I got a couple of questions. We have the man on Echo Trade right now. His portfolio growth at market pivot points has been outperforming the market for consistently, since he's been on the platform, number one spot, back and forth. But I want to talk about, a quick recap of this year, of kind of what you've seen in the market, what have been kind of some of the biggest driving factors that you've been kind of navigating this year that again, you're outperforming this year, just like you have last year and the year before. So what have you seen this year that is kind of really, been the biggest factors in driving your decision-making within the portfolio?
Great. Thank you, Jeff. Well, this year is a little bit more challenging. The market seems to be very bullish, and then also all the indexes are doing well, especially the semiconductor. And lately we have a broader market to join because interest rate decided to drop 50 basis points. So, but leading up to this event, people were guessing the market was not certain whether or not the inflation or economic data supports a rate cut. If so, when and how much? So I think at least we got that clarity. But going forward, still have a presidential election, which is a big thing for the market. So I think this year is this kind of struggle. If you can see the market overall and looking in NASDAQ and Dow Jones and also S&P. And we said there's a dramatic drop back in around April, and then right away in July and also August. So therefore, this kind of market is quite different than 2023. And 2023 was kind of straight up kind of scenario. Maybe we have one drop around July. And other than that, was totally pretty smooth. But 2024, even though we look back, seems like the market is still doing pretty well, but it's harder to navigate because of those corrections and things like that. And I think in April, we saw the geopolitical risk, and where there's on Friday, option expiration, one of the missile was filed. So that was kind of a first shock to the market. And then people think about also a lot of opinion about the market, whether or not we are in a bubble-like situation like 2009, and also like a tech bubble 2000, back then. So those are pretty scary pictures if people are loading up with market. And certainly most of the market participants, and they're individuals, and they are kind of swayed by this kind of emotion and influences and of different kind of things coming into the market. So in short, our portfolio has been performing well, but still kind of feeling those bumps along the way. And we were able to trade in and out of portfolio and kind of decreasing the exposure, especially in some of the stocks like NVIDIA and Tesla and as well. And for example, I think NVIDIA went up as high as $141 and then went down as low as $91. And within a week, it went from 121 to 91. That's a $30 drop within 3 days. So that you can feel how much a shock that the market experiencing, especially for the short-term traders. And if you're long-term traders, investors, it doesn't care as much, right? So I think overall, we have a couple of things for the market coming into right now, September. So interest rate and geopolitical risk, and also the valuation of the tech market, which we already noticed that back in 2023. So nothing really surprised, but when it actually happens and how it happens still needs lots of way and skill to navigate that. And we were able to sell Tesla stocks right at the earning, I think back in April. And then because I was very bullish for the AI sectors, I mean, in general, but still, I mean, Tesla being one of the front runners and also have lots of things planned for AI in the future, but still short term, and that's lots of gyration and lots of non-believers, and then therefore we forced to sell out some of the positions and then bought it back recently, and then also we were in cash for a period of time during May to August, and especially we sold some of the positions, and therefore our cash balance was about 30% so at time. But also we were able to pick up some stocks like Intel and also Unity U at the right price at the right time. And now after 2 or 3 weeks, we bought them and they were up about 20%, 15, 20% or so. And those are short-term positions, and that therefore we were able to utilize in the timing aspect, both in terms of portfolio cash and also position exposures, as well as in selling and buying at the pivot point, as the portfolio have dictated we want to invest around the pivot point of the market. So that's the whole thing about our portfolio.
Yeah, I want to ask a quick. Oh, sorry. I wanted to kind of take a step back. You mentioned something in terms of kind of market sentiment and people being fearful of a bubble. We're up 20%. On the year as a whole, over 20% already. Your portfolio is more, but people are looking at that bubble. There's a lot of uncertainty with market, again, with interest rates as well as the election coming up. How do you kind of navigate, or what would your kind of recommendation be for people to be able to navigate that type of uncertainty, whether or not to get into the market in the first place, or what they should do kind of on an ongoing basis right now? Just how to navigate that type of uncertainty and that fear of a potential bubble.
Well, number one, for us, I mean, it only pertains my personal opinion and also how we deal with the market. Number one, we don't predict the market. And when we don't predict the market, there's nothing that holds us to, so that we are very flexible and be able to follow the market. If we really predict the market and we have too much confidence on it, when the market turns around, and we are pretty hard to get us out of that mindset. So that's number one. I think that will probably set us apart from many other different major, even though conventional wisdoms. And when it comes to timing the market, of course, people don't believe in timing the market. So we are the minority of the minority. So number one, don't set a expectation and don't convict on your belief. And we just follow the market. As long as the market tells us the cue and the direction, and we just want to follow the market to the best as we can. So basically, back in 2022, and we were able to follow our signals and be able to put the trades according to the signal. And we were able to sell very close on the top on short-term time, and also be able to buy at a very bottom, relatively short-term basis. So we also apply that to a long term. So back to your question, number one, don't predict the market, just follow it.
Yeah, exactly. And so to that point, you're looking more at the charts and again, seeing how price actually is going to dictate your decision making. So let's do the opposite now. Let's talk about, the Fed just met last week and they dropped the interest rates for 50 points, first time in a long time. Obviously, interest rates and inflation have been the biggest drivers of the market and kind of everybody's concern. So with that rate drop, what does that pertain for you? How do you kind of look at that, how you make decisions, and how you view the market moving forward with the anticipation of 2 more rate drops this year and then more coming next year?
Great. So I just want to contradict myself about what I just said a few minutes ago. Yeah, one predict the market, but I have to make a prediction. So basically, I predict that the market possibly going to go up a little bit, maybe by a few more days. And normally, the peak is around option expiration. So basically, I'm thinking the market going to peak out in the next few days, and potentially we're going to go down pretty sharply toward the middle or end of October. And normally, because there's a seasonality, and if you look at the last 50 years or 20 years or so, in November, September tend to be the pretty weak months. And also that happens in 2022, there was a bottom of the current bear market, and we were able to pick up a buy signal on November the 3rd on all the sectors and all the stocks. So even though I want to say that don't predict the market, if you do, and I did, don't have too much conviction. So be very flexible, but somehow because we have to look forward and we have the formal opinion, and that opinion is going to help us to prepare what strategy, what exposures, and what kind of timing. But still, we'll be able to get away from it because we're going to follow the market. Market going to give us the signal, which might be contradicting to all our expectations. So that's a key thing in how we navigate the market. I think looking at the market, I'm very bullish, and because the interest rate environment is going to go way down in the next 2 years or so. I don't know how soon the rate cut will be, but it doesn't matter. It's more a direction. And now the whole world is looking at the interest rate trend, and then that's going to be affecting immediately for the U.S. economy, but also for the world economy as well, because people can, or the countries can, lower the interest rate to really alleviate any pressures on the economic systems, especially for China. If you look at China market, has been dormant for last 3 years, and the market has been like mediocre for the last 30 years. But still, I mean, we see that 8% pop up on the index 2 days ago, and that's a reaction, a delayed reaction to the global market reacting to the interest rate of the US. So that's very positive. I mean, at least the way I looked at it. And my overview for the next 2 years, and then is that the market going to be supported with all the bullish. And also, I think the interest rate going to have a compound effect into different sector and segment, including financial, real estate, and of course, high tech. And on top of that, I think I share the bullishness on the AI sector. And currently, I think AI has a lot going on, even though lots of non-believers, but I'm contrary to that. And because if you look at ChatGPT 4.0, and also people talking about the future of AI, it's called, they call the special intelligence. Instead of focusing on the natural language protocol, like ChatGPT, and the computer can think, the AI can think, can logic. I think that's a very good advancement. And people talk about the AGI, which is the AI has a human consciousness, right? So I think that's still about 10, 20 years away. But focusing on the what they call as AI agent, meaning that you have very small AI focusing on area of domain expertise, for example, medical, financial, manufacturing, and then combining together eventually will be a very, very intelligent, not just artificial, could be real. So currently, I looked at ChatGPT 4.0, the IQ on that is 155.
Yeah, it's interesting. I mean, I hear a lot. There's obviously there's a lot of optimism, right? Oh, sorry. There's a lot of optimism and bullishness on AI, but I think there's some people that are looking at, potential short-term bubble, but long-term, obviously, it's going to be a massive driver on the market and within our society as a whole. But I was going to even, say, before you even mentioned it yourself, making this prediction, I know you well enough and the way you operate that. Yes, you can have your opinions and make predictions, and a lot of times you're right. I've watched that long enough, but it doesn't. You don't fall in love with that opinion or that prediction. You're gonna let the market dictate on kind of your actual decision making. So finally, let's cap it off. Let's starting a pick'em series. So give me kind of one name, one stock that you're excited about that you see, in the near future, kind of looking great. Or if you want to do one sector, but give us one name or one sector that you're excited about.
Well, I have to pick NVIDIA for now. Well, because right now the AI is all focused on infrastructure and then the speed of calculation, quantum computing. So as I mentioned, when the AI is moving toward the productivity, automation, and eventually you're going to find a company that's going to find a product with a profitability, with sustainable growth in profitability. But all comes down with all the models being built and all the computing power and hardware and software, right? So for now, NVIDIA is my number one pick. Even though I really like Tesla, but I think it's harder to trade and has lots of things going on there. And then just for a hedge, just to kind of counter my conviction, I think the general market segment, such as utility, which is very sensitive to interest rate, which is going down, which is good. So they have like a paying out 4, 5, 6% of dividends. So those will be a good hedge to have. One traditional and one IT. AI related sector will be my pick.
That's perfect. Daniel, always love the insight. Appreciate you being here. And investors, if you wanted to check out Daniel's growth and market pivot points portfolio, you can check it out on Echo Trade and basically just copy his positions. But Daniel, appreciate the time. Have a good one.
Great, Jeff. Talk soon.